Would them take them be? I don't know. I wanna go faster, go faster, go.
Ah.
No such. It sounds
Sorry. Sorry, sir. I think my mic did mute. Mute. Sir, I got a joke.
realize. So like in a yarn too.
So good me never read out the joke.
You're right. You're right. You're right. You're right. You're right, my dear. You're right. You're right. You would want every year if you joke at 100.
So it's not that bad.
Okay.
A
Yes.
compliment me get.
Ah, right. See how go on. See how go on. All right, let's continue. Presari join. So we look at the T accounts now for these things. Now enter this, for example, into the appropriate account result in. Now, first thing is first. Look at the first one. Pay for postage stamps by cash, $50, right? The first thing you do is what? Debit your postage account, which is this one with $50. You know what? What if mistake, man? No one give me a minute. I'm going to do each of them by themselves, right? Now the first thing is first, right? I'll do this for in Excel. So say paid. We're gonna do the double entry with the T accounts now, all right? Good. I pay for postage stamps by cash, $50, right? So I'm going to stop share for this page and share the Excel page, all right? Remember, we're looking at what? Two accounts now. We're looking at what? Postage and also cash. Give me a minute, please. 1 minute, 1 minute, 1 minute. All right, then, folks. Now, so as I was saying a while ago, I'm going to stop share for this one, and we're going to look at the main one is what? June 1, paid for postage stamps by what? Cash, $50. Good. Watch this now. So the accounts are for what? Postage stamps. So look at the postage stamps account now. So you have postage stamps. And you have a cash account as well. You're paid by cash. Now watch how I do this thing now, please. Watch how I do this thing, right? Watch me. So it's June 1. And the June 1, right? And the amount is what? 50. Crap. Something is just so. I'm agent folks. I'm putting on different columns. Insert. And it's June 1, right? And the amount is 50. So you debit the postage account because you are paid postage by a fifth postage account of $50, right? And you're paid by what? Cash. Remember, say it's June 1, same way. Good. You would credit the cash account with $50, right? Now,
assets, expense, and your debit balance and capital, revenue, profit, liabilities, and credit balance. Not increasing them, no? Credit balance.
no, so like last time we said we're gonna cross-reference, right? So for postage, we paid by cash. You're gonna place because cash in this transaction, postage and cash, they are relationship, right? So you're gonna put cash now under beside the date and the money. And then in the cash account now you put what? Postage. Yeah, put the stamps and done. All right. Because it is coming from the what? Postage stamps account, right? That's that for that. Good? Everybody get it by the way? Talk to me. You get this how what I did? All right. Now, that's the first transaction. Good? All right. Share again. Now, the next one now say what? Paid for electricity by check.
Sir, may I write off that? No, sir.
You not write off in a book, man. I'll show you something. You want to write it off? You want to write it off? All right, I'm going to write it off.
That happened when the assignment. Because say you need a blackboard fee, you know?
Then this is blackboard me I use one to ease of Excel. You know.
Okay.
When you not write, Panny? Huh? What you say a while ago? Don't know?
So you're not
Sir,
clear.
I don't understand.
When you go to the cash,
Talk, what happened to you? Tell me.
so you hear me?
Go ahead.
So you're up and down, you're all over the place. You're not clear.
Aren't you seeing the screen now?
Yes,
Sir, everybody I see his
I am
screen.
seeing it.
And right to your right, my sister. Me have to move from one page to the next. That's the reason why. So, unless you have a printed copy, a different story that. But, yeah. Just watch me and follow me, all right? When you finish writing, all right, let's move on now. You can take a picture, a screenshot or something. but it's already in the book. Good. But in the document, but I'm just showing you how in detail, more detail, explain it to you what happens. All right. All right. Next one. We'll continue the question now.
Question, sir.
Yes.
Question. Sir?
Go ahead.
In that example that you're giving a while ago, that example you showed a while ago, it has to do with debit and credit same way.
Yes.
Debit on the
Yeah.
left and the credit on the right.
Yes. So this side's debit side, this side's what? Credit side. Left,
Okay.
debit.
What that?
Debit, right? Credit. However,
Credit.
because the transactions that you paid postage stamps by cash, you would have, and postage stamps are expense. And when expenses increase, you debit. So you make a debit entry on the what? Postage stamps account. But when cash, and because you pay by cash will decrease. And when cash is an asset, and when the assets are decreased, you what? Credit them. So you make a credit entry under the what? Cash account. Simple. That, all right? All right, let's continue next one. All right. Next one is June 2. So paid for electricity by check. $229. Now, what is no? You are paying for electricity, and electricity is what? Expense. So there's an increase in the expense of electricity. So therefore, we're going to what? Debit electricity account and the pay by check, which is bank, which are asset decreases in asset of bank. So you're going to debit the electricity account and then you're going to credit the bank account. Good. Let's look at it now on the screen. So I'm going to create an account for electricity account now and a bank account as well. All right. So I'm going to call this one electricity account. This time being is out. Also, you have a bank account as well.
Commission.
And remember, it said what? June 2, right? Go back to the original question. It said June 2, paid for electricity by your check 229, right? Now for that case, now we're going to debit electricity account and credit bank. So debit electricity account with 229 and credit bank with what? 229. And then put in the date for June 2. And then put in the title of the account in between. The relationship, right? So you have bank, go on the electricity, and electricity account, electricity go under what? Bank. Because there's a relationship between those. Those are where the two transactions occurred, all right? Between electricity and bank. That's that for that, all right? So you debit electricity account with 229 and your credit bank account with 229. Why? Because electricity is an expense that it has increased. Bank is an asset which has decreased because you're paying by a check. So therefore you credit the bank account, all right?
Same thing. Same thing. See, it's an increase. Sure, sir.
All right, let's continue. And the third one now, transaction. So receive rent in cash, 138. So this is a different story. So the asset of cash is what? Increasing, so you debit the cash account. And the revenue for rent is increasing as well. However, revenues have a what? Credit balance, with a credit entry for revenue.
Receive.
So what? Credit what? Rent received account. All right. And the amount is what? 138. Good. Let's look at it now. What is done? So you're gonna create. You already have a cash account already, right? Good. But you don't have any rent receive account as it. So you're gonna create a rent receive account now. Follow me? You will need to create a new cash account. All right. All right, let's look at it now. So look up this one down. All right, so now we're gonna create a rent receive account with this one. No? So this is called a rent receive account. Take out this for the time being. All right, now, so in this case now, you receive rent of 138 in cash. You're gonna debit cash now. Good. And that was one again, June what, 3? June 3, right? Go back to it. It was June 3, but not talking about that. So June 3, receiving cash 138. All right. So when you debit the cash account, so you have a dollar sign, and you debit the cash account with 138, and it's on June 3. Good. And you're gonna and it is what? Rent received, right? So you type in rent received. Then on their rent receive account, they're gonna make a what? Credit entry. 138. Remember, don't ask me why you make a credit entry. Why? The reason why, because it is what? Revenue. Revenue is our credit balance. All right. And when revenue is increasing, what? Credit. And because it was by cash and the relationship is between cash and receive now, you write cash right here. That is the entry for that transaction for June 3. So you remember, first you would have debited the cash account because they're receiving cash. As the cash is increasing, so you debit the cash with 138, and then you credit when receive with what? 138, because it's a revenue account. All right. They have this, and they have this as well. All right, let's move on now. Should write that down already.
Hold on, sir.
Hold on to what? Hold on by your head.
No, me taking my screen, me taking the picture.
You say?
Sir, can you scroll back up, please?
To which one? Cash? Yes, you on?
Yes, sir. Yes, sir.
You finished now?
No.
Go ahead, Austin Gisdale.
Sir, are there instances where you have a transaction and you can, for example, your debit, each day debit you have to credit. You can have one transaction where you do debit alone and no credit needed.
It all depends. But normally, you go have debit and credit normally. All right?
Yeah,
Every transaction
all
must have a debit and credit.
right.
All right? Okay?
Yes, sir. Yes, sir.
But good question. But sometimes you might have a case where you might make a debit in your book, but you don't have it, you don't record it elsewhere. So, but that would cause a problem in the balance of the books. All right? So there must be a debit and a credit entry at all times. All right, next one now. All right. Paid insurance by check of 142 June 4. Now the expense of insurance is that as is increasing. So we got debit entry, debit insurance account, and you credit the bank account. All right. Let me do the vote, please. All right. So for this one now, say pay insurance by check 142. All right. All right. So debit insurance account, and then you have asset of bank is decreasing. So credit bank account, right? So in this case now, you would have so two accounts you are affected here. You have insurance and you have bank, right? Insurance is an expense, so you have to debit insurance because it is increasing, while bank is an asset and it's decreasing, so you have to credit bank. You got it? Just do it now. Together. So you have you already have a bank account, right? So only you need to do it now is to create an insurance account, right? All right, so you create an insurance account now. And in this case now, you got debit insurance. It's June 4, right? And the amount is what the amount again? The amount is 142. The debit insurance 142.
142.
Yes. And then you're gonna credit bank account now. June 4, 142. And you're gonna put insurance under bank account, and then you will put bank under insurance because they are relatives in this transaction. All right, so that's that for that. So you have insurance account. And go back up now. The bank for those persons who are writing. All right. All right, let's new share now. By the finish, I believe. So in summary, see, these are there, what I wrote a while ago. So in summary, cash, bank, receive, postage, June 1, June 3, bank, June 2, electricity, 229, insurance, June 4. These are what credit because insurance, electricity, they are our expenses, and they were paid by check. So these are all expenses, right? I'll share them, debit entries, because they are all expenses. But revenue now, receive was a revenue, so you have a credit entry for that. Good. 138. All right. Sometimes the owners will want to take cash out of the business for the private use. This is known as joins. Any money taken out as joins will reduce capital. Joins are never expenses of a business. However, like expenses, an increase in joins is a debit entry in joins account, with the credit being against an asset account, such as cash or bank. So our minutes are expiring again. As soon as the minute is finished, please rejoin. All right. In theory, the debit entry should be made in the capital account, as joins decrease capital. However, to prevent the capital account from being full of lots of small transactions, drawings are not entered in the capital account. Instead, a drawings account is open and the debits are entered there rather than in the capital account. All right. The following example illustrates the entries for drawings. On August 25, the owner takes $50 cash out of the business for his own use. All right. On June 25, The owner takes $50 cash out of the business for his own use. Capital decreased by $50. So you would what? Debit the joint account with $50. All right. Cash is decreased by $50. So you also what? Credit the cash account with $50. So when you see a transaction like this, you know say it's either the cash account that decrease or the bank account decreasing. Good. So even though capital is decreased by $50, you won't trouble the capital account with this entry. You will create a drawings account. All right. So therefore, in this case, we have drawings, debit drawings 50, and write cash there. All right. And then now you have cash now. You credit cash, drawings 50. And that's the sometimes goods are taken for private use. Sometimes goods are taken for private use. These are also known as drawings. In section 3.2, you learn that when goods are purchased, the purchase account is debited. As a result, when goods are withdrawn, it is a purchase account which should be credited. All right. Now, the following example illustrates the entries for this form of drawings. And August 28, 2008, the owner takes $400 worth of goods out of the business for his own use. All right. In this case now, you would debit joint account with 400, as you see here, and you want stock. The capital is decreased by 400. The stock is decreased by 400 as well. I would credit the purchase account with 400 joints. All right. That's that for that. Now, we're going to work through an example together. And we're going to work through an example together now. And when you return, when you finish working through this, we're going to work this example together now. I'm going to ask individuals to tell me how we approach various transactions right here in this question. Together, we're going to do what? Together. So, if you never know what to do before, you must know yourself, right? Oh. Oh. All right. First thing is first. A minute.
Mr. Bernard?
Asukum. Go ahead. Tell, listen.
We're going to send the book.
Huh?
Are you going to send the book in our emails or? Yeah,
Email.
Okay. Personal email, or are you going to create one?
on a personal email, boss.
All right.
Plus, I'm gonna put it on iTunes as well. Yeah.
Okay.
Sir,
Yes.
sir,
Yeah. Go ahead.
remember when you email me? Remember when you email me?
Now you're
Forget the
clear.
one. The L with the words you do, it mix it as
Now you're.
Sir, I'm saying don't mix up the L with the one. It's Jodine L. L as in Lawrence. Last time you sent me an email, I didn't get it because you put the one instead of L.
Okay, man. Okay. All right. The first one says started business with cash. I'm gonna do this one for you guys. Started business with cash. 8,500. All right. So there are two accounts affected here, both cash and capital. Okay. So I want to create a cash account and a what? Capital account first. Good? Clear as mud? All right. 8,500. Good. All right, so we have a cash account and a capital account. So we're going to have cash account now. Sorry, I'm going to do the capital account first. Capital account. Check this out for the time being. I also have a what? Cash account. Now, when you're making your entries, remember that the first thing you do is to make an entry for the capital you what? To increase capital. Before we go further, the date is 2008. The date first, 2008, March 1. And the capital is how much? 8,500. So you make a credit entry for capital first. Then you're going to debit cash, 8,500. The date is 2008, March 1. And you put in cash under capital. And you put in capital under cash. So remember, first thing you do is to what? Credit capital. And then what? Debit cash. Now, please rejoin. Our time has expired. Please rejoin as soon as possible.